It is July 2nd, and this is the video log. It takes 30,000 to a million. So I wasn't gonna make a video today, but I do have an all-time high, so I think I should log that in, show you what made that possible, and also I need to warn you guys about triple X leverage funds. I think I may have a video about that already, but it's never bad to repeat it. Don't buy those funds, especially volatile ones, but even if they're not volatile, just don't buy them, period. Like there's this thing, I don't know what the official terminology for it is, but it's like this volatility decay that I might not go over in too much detail, but basically the longer you hold the fund, the more of the value you lose, because of the fact that it's leveraged and only replicates daily gains or losses. All right, so it's very dangerous. So I'll show you what's going on in the account, and then I'll show you a couple of examples to really dissuade you from quote unquote investing or even trading these things over more than a day. All right, so I am sitting at 61,620, which is a all-time high record. I've gained $475 today on this account. The main reason is the huge pop in gold here gave me $99 in EXK, which is the silver gold miner, mainly silver. Operates in Mexico, Canadian company, one of my favorites to trade. I usually do a scaling and scale out method in that company. Apple was up $160, and it also eliminated a little bit of liability from my options, namely $94. I'm now winning $800 on this option play. So other reasons: royalty income, $21 gain. Wheat and precious metals, 166, great number. However, I'm not getting all of that. Unfortunately, I have pre-sold 100 of these shares at the price of 24, and I am already 24. I'm already $24 and 60 cents. So those 60 cents are not. I'm not gonna see them. However, I am getting the premium from the option. So wheat and precious metals. What else do we got here? I think uranium. URA, yes, the uranium business ETF. URA is up $20, and that's about it. Emerging market bonds up 7. All right, I had a couple of dividends too, small dividends totaling like $14 or something like that. That helped bring this up to a $475 day. So I'm really happy about this all-time high. Doing better than the market. I think nope, I'm not today. Not today, but over the course of the week, I think I am 1.67, so I'm on good pace. And 2.36, yep. So I'm beating the market over the week, so that's great. I'm looking forward to see what the rest of the week has for us. Now, triple leveraged ETFs. Don't do it. All right, I'll give you just 2 examples. Some of you guys probably invest in mining companies, so I'll give you the NUGT and the DUST. All right, they're both leveraged. One of them is a bull ETF, exchange traded fund, and the other one is a bear ETF. And now let's go into the NUGT and see what's happening here. All right, it's up on the day, 11%. You're thinking that's fantastic. It's great. But let's look at it over a 5-year period. All right. Boom. Look at it. It was $400. It actually wasn't $400 to do reverse splits. It was $400, and now it's $28. That's a loss of 91.71% of your value. Now you might say, all right, well, the gold miners have been in a bear market for the last 5 years, so this is natural, triple leverage, blah, blah, blah. Okay, well, that means that what? The inverse of this, which is the bear triple X leverage, 3 times leverage daily return, the bear ETF would actually be going the other way, right? It would have a 91.7% gain or even more, right? Because it keeps stacking on top of itself. So it's called dust. Let's go to dust and look what we find. Today, down 11%, completely inverse of the other, and we'll expect at least a 91% gain over 5 years, right? Boom. Not a gain of 91. In fact, it's way less. At some point, this fund was 2,362. It wasn't, but it reverse split, right? So it really was. So if you had $2,362 worth of value back in October 31st, 2014, now you have 10 bucks and 75 cents. Just don't do it. All right? Bull or bear, you're going to lose money over time. All right? The reason it works that way, I'll give you a brief explanation, all right? The reason it works that way, especially in a volatile sector, is because if you have a 50% gain one day, all right, let's say you have let's make it easy to computate, all right? Let's say you have a 33% gain one day. That's not a word. So you have 33% gain in the gold miners one day, all right? So now the triple leverage fund, it multiplies it, and it's 100% gain. So let's say you had $100, now you have $200, all right? Well, when on the next day, if you have a 33% loss, times 3, that's 100%, right? That $200 gets wiped down nearly to zero. Okay, so that's how it works. It doesn't work the same way on the way down. If you have a 33% loss off of $133, right, it's still going to be below 100 because the percentages work different on the way down as they do on the way up. But it's not going to wipe you out completely. You're not going to lose. You're not going to be down into the zeros or close to zero. All right, look at how much this is lost. Right, 98.81% of its value. Look at this decline here. Boom. All right, keeps going down, and it's going to keep going down. And it's going to keep reverse splitting and reverse splitting. So don't do it. I mean, if you want to do a daily, if you want to day trade it, maybe hold it for a week if you want, but you got to really understand how it works, right? Because it's the more volatile it is, the higher the risk is of this effect taking place, right? I mean, it's going to take effect every day when you do it, but what I'm saying is it's going to be amplified the more volatile the fund is, right? If something is not as volatile, maybe like the S&P 500, you could probably get away with it, but I still don't recommend it at all. Let's see if we get a 3x bull on S&P 500 over 5 years. We got 179% gain. Great. And let's see a 3x bear. And we get a loss of 86%, right? So you can see how it doesn't take effect as much because the S&P is not the S&P is not that volatile. All right. Now, even the bull though doesn't return 3 times over a long period of time. Okay. Well, in this case, more, but it should be returning a lot more, right? Like, let's say you have a gain of 51%. If you keep multiplying that, it's going to be a lot more than the 179 that it is. But in any case, don't use these funds unless you're trying to day trade. And even if you are, like, really just study them, understand it, read the prospectus, find out how they work, run a long-term chart, like do some research before you do it, because it can burn you. All right, it can burn you, and it can cost you a lot of money. It can be a very expensive mistake if you start putting a lot of money into it. All right, so anyways, that's my warning. I'm gonna leave it at that. New all-time high. I'm happy about that, but I'm just mad that people are using these funds, all right, for anything else but day trading. Okay, so anyway, more happy than mad, but I'm mad that you guys are losing money. Don't do it. All right. So with that said, peace out.